AMC just made another massive run just a few days ago, so we have a few things to talk about. We have a lot to cover in this video. We'll talk about what caused the massive move and what the data suggests is happening to AMC, whether this will lead to another so-called mother of all squeezes, and what the future outlook is for AMC. Let's do it. So looking at the AMC chart, it really looks like it did nothing yesterday and it just consolidated between the $43 and $48 mark. But in reality, there's a lot happening behind the scenes. I like how AMC made the run and it was able to keep above the $43 mark the next day. That shows some strength in the stock, which is encouraging. The Ortex data for AMC shows that the short interest estimate for AMC is around 17%, which seems a little low, but it's important to note that these short interest estimates are calculated by institutions self-reporting their short interest data. So it's really easy for any institution or hedge fund to lie about how many shares they're shorting to make the short interest percentage look like it's less than it really is in reality. We've seen institutions lie before, and it's likely happening again on the short interest data. Generally, when institutions lie about their self-reported data and get caught for it, they do get fined, but the fine is less than $1 million every time. $1 million is like nothing for these funds that are investing hundreds of millions of dollars at a time. Also, another metric that's looking in the favor of AMC going up again is the utilization rate. We're seeing that AMC is keeping a utilization rate near 90, which is high, and it's good if you're looking for AMC to squeeze again. For anyone that doesn't know what utilization rate means, the utilization rate is based on borrowed shares divided by the shares investors are willing to lend. The closer the utilization rate gets to 100%, the greater the risk for short sellers. So basically, if utilization rate is higher, it puts a lot more pressure on institutions that are borrowing the shares to short. Also, there are almost 100,000 options in the money for AMC. If we take a quick look at some of the option chains, we can see that there's significantly more volume on the $50 strike contracts. There's also a little bit more volume on the $45 contracts and the $55 strike contracts, which indicates to me that if AMC can sustain above $45, it will benefit a little. If it can get above $50 mark though, I think there will be a lot more buying pressure in AMC just because the amount of these contracts is much higher. There are a lot of contracts that are just barely out of the money, and if they can get to becoming in the money, AMC will likely get a boost with extra buying pressure. My theory is that when some of these smaller hedge funds are really starting to lose money on their short against AMC, they will be forced to sell off some of their long-term positions in the market to try to recoup some of their money, which will probably cause the larger stocks to come down a little bit. At the same time, they may also be forced to cover their short positions on AMC if they are really losing money. So AMC will be getting pushed upwards at the same time. So my theory is that while the larger market cap companies are falling, the money might rotate into the smaller market cap companies, and AMC and some other stocks might go on another run again. That's all I have for this video. Comment your thoughts on AMC. Peace.